Have you heard your tips might not be taxable this year? But it's not quite that simple. Individual taxpayers who earn tips might be eligible for a brand new deduction of up to $25,000. I'm Mark Steber, Jackson Hewitt's Chief Tax Officer, and I'm going to break down everything you need to know about this huge tax law change. What is the new $25,000 tax deduction for tips? Well, single taxpayers who earn less than $150,000 or those married filing jointly who earn less than $300,000 might be eligible for this new tax deduction on their 2025 tax return worth up to $25,000. This deduction phases out at a 10% rate until it reaches zero, meaning the phase out at $150,000 for single filers by $100 for every $1,000 of tip money. For example, a single taxpayer claiming the maximum $25,000, the deduction would ultimately reach zero at $400,000 of modified adjusted gross income. For a married couple claiming the maximum, the deduction would reach zero at $550,000 of modified adjusted gross income. This is great news. The deduction is available to taxpayers with a valid Social Security number who file a joint return if married, and for those who either take the standard or itemize. It is for tip money earned and reported to the employer starting on January 1st, 2025. We're waiting to receive more guidance from the IRS on how this deduction will need to be reported on IRS forms, but we do know which jobs the IRS has said will benefit from the deduction. This includes occupations in 8 categories: beverage and food service, entertainment and events, hospitality and guest services, home services, personal services, personal appearance and wellness, recreation and instruction, and finally, transportation and delivery. A full list of these jobs can be found on our website, as well as at irs.gov. Lastly, this new tax deduction is only temporary and is set to expire on December 31st, 2028. My best piece of advice for those who earn tips at their jobs: keep good records. It will be extremely important for this tax deduction. But do what works best for you. I recommend having a consistent routine of records, like after every shift or pay period, writing down how much you earned in tips, both in cash and credit, next to the date worked. Doing this regularly will help you stay organized throughout the year and not stressed when you go to file your tax return. This is a big break to eligible taxpayers. But be forewarned, there could be risks of penalties and fraud from the IRS for those who try to lie and claim this deduction when they aren't able to. Learn more by scheduling an appointment with a tax pro today on jacksonhewitt.com.